Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I want to give you an update on Alibaba stock. Alibaba holding group, ticker symbol BABA, because in the recent days we basically had some kind of rumors and news going on. One of them is that, as reported by Seeking Alpha, first reported by Wall Street Journal, is that China reportedly asks Alibaba to divest media assets like Weibo. So we are going to talk about that, what that means for Alibaba and how big of an impact can this have, as well as all the stuff that we have seen. For example, it looks like that China is kind of forcing Alibaba and Tencent to accept each other apps in order to favor basically the competition. So where are we with this probe? Okay, so is the end of this probe near for Alibaba and other Chinese big tech, or are we still in danger? Okay, and then I'm also gonna take a look at the graph over there to kind of understand where we are right now. So the only thing I ask you is please leave me an early like, it's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so the first rumor here, this probe which is still going on, looks like that we are not able to see the end of this. More than 3 months actually that Alibaba has been under pressure, starting with the Ant Group IPO. Now they are continuing to coming out rumors, and that one tells us that China basically is asking Alibaba to divest the part of the media, okay, that they have. So they have invested key Alibaba media businesses, included Weibo, the social networking platform, the South China Morning Post publication, so they own a part of the South China Morning Post journal, and several other popular Chinese digital and print news publications, as for example Youku, which is a streaming service very popular in China, and that's it's also kind of interesting because if you subscribe to that streaming service, you are automatically also subscribed to basically the service of Alibaba, which is a kind of equivalent in Amazon Prime. And officials also reviewed Alibaba's entertainment business, okay, so not just the media part, but as of now they still have to decide on that. Now actually, in order to understand how big of an impact can this be, because if we read the articles, obviously everything looks very bad when government forces you to divest on something, but the fact is that we need to understand where Alibaba makes money and how much of an impact can this have on Alibaba itself. Okay, so as of now, as we can see, this is from the last earnings. Obviously, this huge 34% year over year, 46% comes from the China retail marketplaces. Okay, so if you want to find the core of Alibaba, obviously is the retail. In that you find Taobao, Tmall, and basically all the Alibaba's platforms that are straight up to retail and basically selling products, as well as the new C businesses, for example, Taobao Deals, but also Taobao Groceries, and some actually physical shops as well. So that's where Alibaba makes the biggest part of their money. Another huge chunk, another 20%, is basically still from retail, where we have also their international commerce, okay, over there, 5%. And then logistics, local consumer services, the wholesale of Alibaba. Then 8% cloud computing. This is a moving business. We have seen the power of it, for example, with Amazon, that as of now, Amazon makes most of their money just with the cloud business. Then over there, we find the 4%, okay? The 4%, which is digital media, which is under attack as it seems, and then entertainment, which as of now they still have to decide. Okay, so as we can read from basically the article Seeking Alpha reported by the Wall Street Journal. And here you can see, for example, Youku, which is the app, the tools that I was telling you before, okay, the streaming services. I think is the second or third most popular in China, right? So there it is. Now, Obviously, 4% is quite significant. Anyway, considering the huge environment, okay, which is Alibaba business as a total, I don't think that 4% has a significant impact, considering that a lot of total revenue is made from the core commerce, which is China retail and then also others China retail. But anyway, the retail as a total, it's the red part here of the cake. 87% which comes from the retail, okay, whether it is China based or international. Now obviously, in order to understand some numbers over there, how much can a 4% have an impact on the total future growth of Alibaba's business? In my opinion, look at that. This is 34, what they have done in 2020, okay? And analysts are forecasting this to remain in the high 20s next 5 years of Alibaba. Now, if you remember my previous valuation, basically this is, in my opinion, very conservative about Alibaba, because analysts, they are saying that the growth rate can still remain near 30%. However, in this valuation, I have done different cases. Basically, I consider 20% until 2025 and then going down to 12. The bull case was 23 and then 13% until 2028. The bear case was 18, okay, so almost a half of what analysts are saying about Alibaba, and then 10% going on to 2028 with a rate of return, so discount rate 11%, which is pretty high, okay, so a conservative valuation. And you can see how all of those things, pretty conservative, basically you find an average fair price today of around 336.97 cents, okay, per share. Now I want to just make you understand what the market is pricing right now, for you to understand whether this, even though they will divest digital media, which is not the full 4%, okay, because you have also entertainment, but let's say they divest everything over there. First of all, Alibaba gets the money, okay? So it's not that you lose the things. You are gonna get digital media, seems to me, which is around 8 billion, okay? 7 to 8 billion investment. But anyway, even in the bear case, okay, instead of a 30% growth, I have considered just 18. If you look at what they've done in 2020, it's basically 50% less, okay, or so. I have reduced that very much compared to what they have done. I don't think that divesting the media business will have an impact so big on basically the future growth of Alibaba. But anyway, let's try to see what the market is pricing today. So what we do, we go over there and we play with the growth rates until we reach $230 per share, which is the price of today. And I have tried it before making the video, and basically you will end up with a 9% growth rate until 2025, then going down to 6% until 2028, with a perpetual growth rate of just 3%. Now, if you do all of that, you have basically what I have called the today's case, okay? So what the market is pricing today. And here we go, $234.89 per share is the fair price that you have if you put a growth rate of Alibaba of 9% until 2025 and a 6% until 2028, okay, with the 11% discount rate. And the price today is even lower than that. Now, let me ask you a question. Do you think that even if the probe ends up in a big fine, even if they may divest the digital media and entertainment business, now, do you think that this growth rate over there, and then forecasted to be an average of 30% over the next 4 to 5 years, can drop to 9 just because of that divestment and a big fine? Now, in my opinion, that's kind of exaggerated, okay? And that's why I still believe that Alibaba today is extremely undervalued. As we can see, that's, in my opinion, still today the fair price of it. And basically, it's 31.75% underpriced with the price that we have today in the market. Now, when we take a look at the graph, if you follow my channel, you know that I have drawn this thing basically months ago. by telling you that this upside trend is very important actually to keep it. Okay, so Alibaba must keep the long-term upside trend. I told you that a strong area of support was around the 200 area, and that made the stock bounce back. And now we are again in this support over there around the 230 area. It seems now that today is trying to bounce up. Anyway, we are still blocked in this basically range between the 230 250. We have been there for a very long time. And the reality is that as long as this drama with the probe will continue to go on, the stock can trade, okay, between this range to nothing, because people are afraid. Simple as that. It's not easy to understand what is going on there. That's the main problem that I pointed out even in the previous video. So we have just rumors, we have news, but it's not like that we really understand what's going on, and people are afraid. So what am I doing? Obviously, I have been buying a bit Alibaba in these drops, but as I told you in my previous video, my position is now enough for me to hold it, okay? Just hold it. I don't want to put more money into Chinese stocks. I told you that I have that percentage of my portfolio ready, which is now at the moment around 13%, 12.5% in Chinese stocks. And as long as I don't get more confident with transparencies and all this kind of stuff, I will obviously hold my position. I told you many times that I like this Chinese opportunity over the long term, okay? But in order to feel very, very confident about it, I need a little bit more transparency. So I will wait and see how this will play out. Now, obviously, when we take a look at the fundamentals, the price today is just ridiculous. The only way to explain this price is the pure fear. We don't know what's going on, okay? But it will be just that divestment and a big fine and that everything will be all right. How long will it last? Or there will be more and probably more impactful divestments for Alibaba. That's why the market is just pricing this ridiculous valuation for Alibaba today. Once again, the 9% case, okay, growth rate, future growth rate, compared with the 34% done in 2020 is absolutely ridiculous in terms of fundamentals. Okay. However, it's all about the trust you have in the Chinese stock market. It's all about that. We have to see how things will play out in order to build trust. Then, if that happens in a positive way, I have no doubts that Alibaba will go higher than that, because simply the valuation doesn't make any sense. Unfortunately, I think that we need to be patient with it. I told you many times, it's a long-term investment, and as you can see, as you have seen in the previous 3 months, that's a way long-term investment, because basically in 3 months the stock hasn't done absolutely anything. Okay, so it takes time, and I'm very curious actually about to see how this will play out, because I think that the Alibaba probe and also the Tencent probe and all this kind of stuff will give us a big idea on actually the future outlook of the Chinese stock market. Okay, so anyway, that's just my opinion. Leave me down a comment with your opinion. I love to read them. And that's the end of the video. So I hope you liked it. Leave me a like if you enjoy it, and subscribe to the channel. And as always, guys, have a wonderful day.